Jason Katz, Managing Director at UBS. In a nutshell, can you tell us what's behind this extraordinary election week rally?
Stuart, we're making lemonade out of perceived lemons. I mean, we've been talking about since the summer, you and I, the importance of the senatorial elections. So very simply put, no divided government equals no onerous taxes, no draconian regulations. That, in a nutshell, is why you've seen nearly a 7% rally over the last 2 days.
And that's it. That's the big deal here. Divided government is the big deal. But what about the Federal Reserve? Jerome Powell, as he's going to speak today, we believe, what's he going to do? Print money forever? Is that what you're expecting?
I mean, look, Federal Reserve Chairman Powell has been arguably the most vocal advocate of more fiscal stimulus. So you know you're going to get a dose of that today. He is going to keep rates low for long on the short end. On the long end, we've seen rates come down. There was a rise in rates heading into the election because we thought we'd get this big blue wave and a $2.2 trillion stimulus package. Stimulus is back on the table. McConnell's tone has definitely been conciliatory. But with rates now on the long end likely to remain low, that bodes well for stocks. Plus, the Fed has other tools. They could yield curve control. They could buy long-ended treasuries to help fight this pandemic and keep mortgage rates low. I heard you talking about that earlier today with Susan.
On the program in the past, recent past, you've talked about, I think it was $5 trillion cash, liquidity, sitting on the sidelines around the world. Could we conclude that some of that $5 trillion around the world is now funneled into Wall Street, into the United States? Can you say that?
Well, clearly that's been the case at least in the last few days. There's still an abundance of liquidity. A lot of investors, especially a lot of professional investors, have been caught wrong-footed here. So if you think about a regime of very reasonable taxes that aren't likely to go higher in the near future, rates that are anchored at these levels, bond returns that after inflation adjusted are negative, where else are they going to go? That doesn't mean you blindly buy equities here, but clearly equities catch a bid and have some support at these levels, given that backdrop.
I'm feeling a bit more safe in stocks at this level. That's the way I would put it. Last word to you, Jason.
Look, I would say that you want to be mindful of the risks that still remain. The virus is still running rampant. We've yet to get this next fiscal stimulus package. We've seen a mini parabolic rise in the market. So yes, I think equities for the long run are still the asset class, but I wouldn't just blindly be chasing what's working in the last few days. There's other places in this market that now have value.
I'm chasing nothing right now. I'm sitting back and enjoying the gains. Jason, thank you for joining us, sir. We appreciate it. We really do.